All right, it's been the biggest banking scare since the 2008 financial crisis. Silicon Valley Bank in the US, which specialized in lending to tech companies, was shut down by regulators who seized its assets on Friday. Banking stocks locally here fell sharply, as was the case across the globe. Let's chat to our correspondent in Washington, Benji Hyer. Benji, thanks indeed for talking to us. I see US President Joe Biden coming out today trying to ease fears of a more systemic collapse. I'll chat to that in a moment. But first, the short answer is that SVB did not have enough cash to pay depositors, and that's why it closed. Just give us some context with what happened with this bank.
Yes, the background here is important in order to recognise exactly what happened last week. Essentially, this was rooted in the Federal Reserve's decision, that's the central bank here in the United States, decision to hike interest rates in past weeks and months. And what that did is it devalued the bonds, the assets that this niche bank, the 16th largest in the United States, specialising, as you say, mainly in the tech sector, what that did is it devalued those assets. And when they tried to sell them, they were left with this imbalance essentially between the money that they thought they had versus what they really had. And when depositors, people that had money in their accounts, saw their confusion over the balance sheet, anxiety spread, they prompted people to go to the bank to take their money out, particularly those that didn't have their funds insured. And that is, in a sense, what we know as a run on the bank. And when that happens, in a sense, the bank is unable to operate, it fails, it collapsed. Regulators took over, and then the process began, as you mentioned, for President Joe Biden, the federal government, to assure depositors, to assure customers that their money would be safe, that they would have access to that money, and that this was an isolated incident that will not spill over to create a wider crisis in the banking sector.
And his remarks, President Joe Biden, coming after the depositors were essentially guaranteed that they would be safe and being paid out.
Yeah, that's right. I mean, I think the United States government almost had an obligation to act to reassure the markets first, and also the thousands of businesses, people that had money in SVB accounts. President Biden, the last few hours, guaranteeing that people would have access to their funds from today, and that the general banking industry is safe, that there should be confidence in the markets, whether people had their money insured or uninsured, that those depositors will be able to get that money from their accounts. Although he mentioned that if you had invested, for example, in the bank, that would be a situation where you would not get your money. And the key here is that this is not being branded as a bailout. That's what some Republican lawmakers are calling it. But Joe Biden insists that the average taxpayer will not have to fork out for this in order to pay off SVB. And it's not just that one bank that collapsed over the weekend. We also saw state regulators step in to assume control of another institution, Signature Bank, on Sunday. That was the third largest failure in US history, of course, SVB being the second.
And as you say that, the only reference point that many people have on this side of the world is that devastating banking crisis we saw in 2008. Are we close to that?
Well, the US administration is keen to stress that this is not something which is at risk to the wider sector, that there's no risk of what they call of contagion. And that is because SVB was isolated in the industry it was involved in, which is the tech sector. And so President Biden, again, reassuring the markets that ultimately this is not something that's going to spread wider, but much of this sector is about confidence, speculation. The failure of one bank is, of course, a concern to the wider industry. Emergency measures were put in place by the US Treasury on Sunday to try to ensure this does not become a wider incident. But certainly it is a serious event, given the fact that the last time that there was a bank failure of this magnitude was 15 years ago during that 2008 financial crash. And that is why government intervention was so quickly required in this instance.